friends. Welcome to OAVA's weekly update on money and economy. We begin with concerning news on the global front from China. Last week, one of China's financial corporations, Zhongji Enterprise Group, filed for bankruptcy liquidation as it is unable to repay its debt amid a deepening real estate crisis in the country. The company has been facing a liquidity crisis and financial difficulties for some time now, and in November 2023, the company noted to investors that it was heavily insolvent with up to $64 billion in liabilities, which far outstripped its assets worth $31 billion US. Zhongji Enterprises was formed in 1985 and its group companies were focused on investing in real estate, including infrastructure development and other lending activities. This can lead to substantial losses for investors of the group, and contagion effects can spread in the financial system. It is expected that as a fallout of the bankruptcy of Zhongji, China will enhance and tighten regulations to increase trust and transparency, encourage growth of more robust capital markets, and put strong crisis management systems in place. Moving on to domestic news, as per advance estimates released by the NSO, that is the National Statistical Office, Indian economy is expected to grow at 7.3% in 2023-24 financial year. This is far higher than analysts' expectations and even the RBI's estimates of 7%. So far, the Indian economy has recorded a growth of 7.7% in the first half, April to September 2024, and hence the implicit growth rate assumed for the second half of the year is 6.95%. As per quote by the Finance Ministry, these estimates show that the growth momentum of the Indian economy remains strong and that the reforms of the last 9 years have laid the foundation for the economy to sustain a healthy growth rate in coming years. Some analysts feel the growth rate assumed for second half of the year is high because there can be a slowdown in capex ahead of the elections and outlook for agriculture sector is weak. Overall, even while real GDP growth expectations remain high, nominal GDP may undershoot budget estimates of 10.5% as the CSO is pegging the same at 8.9%. Moving on to news on Indian debt market, after JP Morgan, yet another global entity, Bloomberg, is contemplating adding India to its indices by September 2024. This follows client feedback received during the Bloomberg 2023 Fixed Income Index Advisory Council meeting. Bloomberg Index Services Limited, that is BISL, is launching a consultation to solicit feedback on the proposed inclusion of the India Fully Accessible Route bonds in the Bloomberg Emerging Market Local Currency Index, a statement by Bloomberg Index Services Limited said on January 8th. Moving on to news on the crypto sector, the government has stepped up its crackdown on offshore crypto exchanges operating without local registrations and have asked both Apple and Google to remove apps of platforms like Binance, HTX, and KuCoin from their platform. They have been removed on directions received from the Ministry of Electronics and Information Technology. Several crypto traders have already begun moving deposits to local exchanges that abide by regulations in fear of losing their funds. The cryptocurrency landscape in India has been a subject of ongoing debate and scrutiny. As digital assets gain popularity, concerns surrounding their potential misuse for illegal activities, tax evasion, and money laundering prompted the Indian government to reevaluate its regulatory approach. The ban on 9 crypto exchanges, which also includes well-known platforms such as Coinbase, Bitstamp, and Huobi, signals a more assertive stance on bringing the sector under regulatory control. And finally, we end with news on an interesting stock which has raised up in the debate and controversy surrounding Lakshadweep versus Maldives as holiday destinations after the PM's visit and the boycott Maldives hashtag. A small cap listed eco resort company called Pravit saw its share price going up by more than 40% in last couple of weeks, recording waves of buying from investors punting on anticipated spike in tourism in Lakshadweep. That's it from us this week. Please do click like, share, and comment if you found our content useful, and do visit our website www.oava.in for information on our courses. See you next week.